Did you know that there's one tax deduction that almost every American misses that could be saving you thousands of dollars a year in taxes? Find out what that is in this episode of Retirement Smarts. One of the most common things we see in the office is people come in looking for a second opinion on their tax returns. It's very hard for CPAs these days to actually give substantive tax advice during tax season. And since we have a tax practice, it's very common to see people come in after tax season just to see if they've missed any tax deductions or if there's any tax savings opportunities that they can give to their current CPA. One of the main missed tax deductions out there is missing the deduction for a healthcare savings account. Many people are not aware that the healthcare savings account actually covers the majority of Americans these days. Over 75% of Americans have the ability to contribute to a healthcare savings account. Well, why is that important? Well, it's important because for those of you who've actually attempted to do your own taxes in the past, you'll note that you can deduct certain medical expenses on your tax return. However, those deductions have to exceed at least 10% of your adjusted gross income, which makes those deductions extremely hard to overcome if you don't actually itemize properly or don't have some sort of serious illness that you have to treat. However, a healthcare savings account allows you to actually contribute at least $6,750 a year per family, and it comes right off of your tax return just like you would if you were making an IRA contribution. And the reason why this is so important is that almost anybody can contribute to a healthcare savings account. It's going to lower your taxes, and you actually don't lose that deduction if you make too much money. Many people lose the IRA deduction if you have too much income or you already contribute to a 401k. However, the healthcare savings account deduction can be made applicable to almost every American out there. So right off the very top, you can actually take off $6,750 off of your taxes. And the great thing is, deductions from that are tax deductible, obviously. But just like a Roth account, if you use the healthcare savings account to pay for qualified medical expenses, those deductions are actually tax-free. The account is actually better than an IRA because not only do you get a tax deduction for putting your money in, but then when you take your money out for a qualified healthcare expense, the money is actually considered tax-free. And the list of things you can actually pay for with your account is long. So you can actually pay for healthcare insurance premiums. You can actually pay for any out-of-pocket expenses when you go see your doctor. If you have a child who has certain developmental issues that might have things like ADHD or even things like dyslexia, you can actually pay for parts of their tuition, and again, it's tax-free. So unfortunately, what we see in America, the healthcare savings account is probably the most overlooked tax deduction in America. And if you'd like some more information about if a healthcare savings account makes sense for you and your family, give us a call. We'd love to help you find out if you can take advantage of the $6,750 tax deduction that the government is offering you for a healthcare savings account. If you like that video and would like a second opinion on your taxes, investments, and estate plan, click on the link below, and I'd be happy to spend a few minutes with you discussing your situation.